What is a trading system? A trading system is a group of specific parameters that define entry and exit points for a given equity. In turn, those points, also known as signals, are frequently marked on a chart in real time, and trigger the immediate execution of a trade. There are advantages as well as disadvantages of adopting a trading system. Starting off with the positive points, here are some of the benefits. Emotions are completely excluded. They can save a lot of time. It is easier to let others do it for you. However, nothing is perfect, and that is why trading systems have drawbacks, and no Forex online trading system is an exception. First of all is the issue of complexity. Trading systems require a solid comprehension of technical analysis, and a knowledge of how parameters work to make decisions. Then you have to be able to make realistic suppositions, and then effectively employ the system. The last drawback is that the development of the system can consume a lot of your time. The importance of developing a custom system. The foreign exchange market never stands in the same place for a long time. The different systems available are able to sustain significant changes over time. They only work well for a certain period, and if not updated, become useless. Simply put, there is no best Forex trading system in the world. Thus, being able to make changes to systems is vital, because a developer's task is to adjust their system in order to meet all major market changes. It is the only way that a system can exist, and remain useful to traders in the future. By developing your own trading system, you will not only create something unique, but if you consider the previously mentioned facts, you will also make something that will suit your personal style of trading. There may be a lot of traders that are looking for something that you might implement, and therefore your own system could turn out to be very useful. You could even end up creating a good Forex trading system for beginners. Trade with MetaTrader Supreme Edition Admirals offers professional traders the ability to significantly enhance their trading experience by boosting the MetaTrader platform with MetaTrader Supreme Edition. Gain access to excellent additional features such as the correlation matrix, which enables you to compare and contrast various currency pairs, together with other fantastic tools, like the mini trader window, which allows you to trade in a smaller window while you continue with your day-to-day things. Step 1. Time frame. The first thing you need to decide when creating your system is what kind of Forex trader you are. Are you a day trader or a swing trader? Do you like looking at charts every day, every week, every month, or even every year? How long do you want to hold on to your positions? This will help determine which time frame you will use to trade. Even though you will still look at multiple time frames, this will be the main time frame you will use when looking for a trade signal. Step 2. Find indicators that help identify a new trend. Since one of our goals is to identify trends as early as possible, we should use indicators that can accomplish this. Moving averages are one of the most popular indicators that traders use to help them identify a trend. Specifically, they will use two moving averages, one slow and one fast, and wait until the fast one crosses over or under the slow one. This is the basis for what's known as a moving average crossover system. How to choose the best Forex trading strategy. Before we proceed to discussing the most popular Forex trading strategies, it's important that we understand the best methods of choosing a trading strategy. There are three main elements that should be taken into consideration in this process. Time frame. Choosing a time frame that suits your trading style is very important. For a trader, there's a huge difference between trading on a 15-minute chart and a weekly chart. If you are leaning more towards becoming a scalper, a trader that aims to benefit from smaller market moves, then you should focus on the lower time frames, for example from 1-minute to 15-minute charts. On the other hand, swing traders are likely to use a 4-hour chart, as well as a daily chart, to generate profitable trading opportunities. Hence, before you choose your preferred trading strategy, make sure you answer the question, how long do I want to stay in a trade? Varying time periods, long, medium, and short term, correspond to different trading strategies. Number of trading opportunities. When choosing your strategy, you should answer the question, how frequently do I want to open positions? If you are looking to open a higher number of positions, then you should focus on a scalping trading strategy. On the other hand, traders that tend to spend more time and resources on analyzing macroeconomic reports and fundamental factors are likely to spend less time in front of charts. Therefore, their preferred trading strategy is based on higher time frames and bigger positions. Position size. Finding the proper trade size is of the utmost importance. Successful trading strategies require you to know your risk sentiment. Risking more than you can is very problematic as it can lead to bigger losses. A popular advice in this regard is to set a risk limit at each trade. For instance, traders tend to set a 1% limit on their trades, meaning they won't risk more than 1% of their account on a single trade. Understanding Forex system trading. Forex system trading is a strictly rules-based approach to trading. First, a trader picks an overall strategy or style to follow and then identifies the signals and inputs that should prompt a trade. Once the trade is identified, everything that follows is set out by the Forex trading system. Depending on how developed the system is, this may simply mean where to set the stops and when to realize profits, or it can be more complex and include follow-up actions in separate asset classes like options to increase or hedge positions as the market trend continues to develop. Forex system trading can be based on a set of signals derived from technical analysis.